I mean, for us, it's all about how do we disrupt our own businesses. Blinkit is also part of Zomato version 4, right? So, and in 1 year's time, Blinkit could be bigger than Zomato. So I don't know how long Zomato will have its own relevance.
The lion's share of what we sell on e-groceries is quick commerce. That is as a saliency out of our total business has grown significantly now. In the metros, it has become all the way up to 12, 13, 15%. In certain categories and brands, it's far, far larger.
Quick commerce has taken Indian consumers by storm, rapidly transforming the way millions of Indians buy their toothpaste, bread, and even condoms.
I use it almost 2-3 times a day, and it's almost become like a verb in our everyday life. Let's Zepto it, let's Zomato it, let's Blink it. So that's how easy and quick it is.
So it is quick, it is convenient, it's hassle-free, and I can cook whatever I want without worrying about the ingredients if I have or not.
I use quick commerce every day, almost for everything, and it is really easy for me because there's no human interaction and the delivery is really fast in 15 minutes.
For us today, we obviously don't play in quick commerce where we're delivering in 10-15 minutes, but I also fundamentally believe that grocery doesn't need to be delivered in 10-15 minutes, right? It's top-ups that usually come in that space.
So when and how exactly did the weekly supermarket and Sabzi Mandi trips make way for instant doorstep deliveries?
It is a trend that is growing and that is attracting people who are into slotted commerce also to get into quick commerce. Fundamentally because the changes or the modifications or the efficiency buildup they needed to do to be able to do quick commerce were actually minimal in terms of the fact that they needed to have widely distributed darkrooms to be able to store and quicker delivery partners. And I think that is something that they are building right now.
This is the story of India's biggest retail revolution, and you're watching ET Now.
The coronavirus pandemic changed every aspect of the consumer's life, from shopping to leisure to mobility. But it was the early 2010s when companies laid the foundation of what we know as quick commerce today. Big Basket, launched in 2011, led the way with a warehousing model and offered consumers a wide selection of products and scheduled deliveries. In 2013, Grove was launched, which connected your local Kiranas to the customers and initiated hyperlocal deliveries.
Fast forward to 2021, two teenagers founded Zepto and introduced the now omnipresent 10-minute delivery model.
There have been inaccurate, misleading narratives about quick commerce, right? It started with nobody wants 10-minute delivery or 10-minute delivery is killing delivery drivers, which we disproved with data, right? That it's actually safer than other formats of e-commerce because most of our deliveries are intra-neighborhood, not on highways or freeways, or the economics will never work for 10-minute delivery, right? This is just another inaccurate narrative.
Grofers too transformed into Blinkit in 2021 and jumped onto the 10-minute delivery bandwagon. Swiggy Instamart soon joined the race, and Big Basket introduced a quick delivery vertical, both adapting their models to focus on speed and customer convenience. The latest entrant in the field is e-commerce giant Flipkart, which has introduced a new service called Flipkart Minutes.
Well, the quick commerce companies had stumbled on a secret recipe. Strategically located warehouses stocked with high in-demand items was something that was going on well for them. Now, route optimization strategies and algorithms, along with a better utilization of manpower, was only helping their cause. Thank you. Well, the gross merchandise value of quick commerce has gone from a meager $200 million to $2.8 billion from a time span of 2021 to 2023, and this segment is poised to grow at a rate of 40 to 50% annually for the next 3 years, with 5 major companies in the fray.
Many now wonder if quick commerce will eat into the volumes of e-commerce. Will the price points and delivery fee play a role in the battle? Or will the two services complement each other eventually? A recent study by the Economic Times shows that pricing disparity between e-commerce and quick commerce has bridged across 30 commonly used products among groceries and electronics. At the same time, quick commerce players are expanding into newer categories. Sample this. Flipkart has introduced a 10-minute delivery service called Minutes. Big Basket will eventually completely switch to quick commerce. Reliance Retail is foraying into quick commerce via JioMart, and Amazon is evaluating entry through investment in Swiggy Instamart. In fact, Delivery too has announced its plans to foray into rapid delivery.
Apart from your groceries, we also want to place big basket as that we have electronics also. So that was the theme of the Diwali. We wanted to launch iPhone, and you can get iPhone in 10 minutes.
Over the next several quarters, our same day and next day delivery ratios will continue to improve from 65%. And our plan is that yes, at some point in the near future, almost 100% of orders should be completed within same day or next day.
But players like DMart are not bothered by the rapid rise of quick commerce, with a firm focus on value play and expansion on the back of new stores in high demand areas instead of launching an ultra-fast delivery model.
In both of these, yes, there is growth expected, visibility hai. Blinkit maybe, food delivery maybe, now ticketing business maybe.
The power of motor memory must never be underestimated. And the retail revolution is unfolding on your 6-inch cell phone screens, whether you like it or not. And billionaires know this all too well. Blinkit is pumping in 2,200 crore rupees. Instamart is much ahead, with investments of up to 6,800 crores, while Zepto is splurging a whopping 13,500 crore rupees.
One of the reasons we have increased, the overall size of the offering is to invest behind the quick commerce business. We have seen, higher accelerated growth in the industry itself, and to prepare for a larger, expansion of our dark stores. One of the reasons that we have increased our primary offering.
The competition is neck and neck, with at least 2 major players expanding to more than 24 cities, each adding dark stores at breakneck speed. And the results are already trickling in, with Dipinder Goel now worth a whopping 9,300 crores, and Adit Palicha's net worth is estimated at 4,300 crore rupees. Kirana, or the mom-and-pop stores, have long been the backbone of Indian retail and the frontline soldiers of FMCG companies. But quick commerce has cast a long shadow on the decade-old business model. Dabur agrees that quick commerce is growing at a rapid pace, while FMCG giant HUL is eager to stay competitive in this new space.
India, even after 10 years, your biggest channel will still be general trade. Its share will come down. I would still believe it would be over 50% after 10 years, but it will be highly digitized general trade.
We remain immensely focused on e-commerce because we do think it is the channels of the future. Today, e-commerce now accounts for 14% of my portfolio, and it has been growing at 50%. Quick commerce is now, I would say, growing at 100% plus, and if the consumer is gravitating there, we will be there.
Little wonder then that the next battle will be fought for dominance of the rural markets, which are seeing deeper smartphone penetration. But logistical challenges will not be easy to overcome, at least in the early stages, even as Q-commerce players set their eyes on Tier 3 and 4 towns with better stores and infrastructure.
We've started getting into these Tier 2, Tier 3 cities, and you know what I'll tell you, interestingly enough, is that those cities are actually performing better than metro cities when we launch stores there. And the reason for that, like if you look at the time for every dark store that we launch to hit 1,000 orders per day, in metro cities, it used to take 5 to 7 months. In these cities, it's taking 2 months.
Many Kiranas have found that for survival, collaboration is better than competition, with hundreds of them lining up to partner with platforms like JioMart to stay relevant.
After the quick commerce platform entries in the market, deep discounting, stocked inventories, less consumers and more losses are the main issues of Kirana store. On the other hand, quick commerce platform says that all the Kirana stores need to be omnipresent. Well, there is a difference between opinion for both the players.
घर बैठे वो भी देते हैं, हम भी देते हैं. सिर्फ वो डिस्काउंट डिस्प्ले करते हैं. हम डिस्प्ले नहीं करते.
We also have free delivery and offers at our stores. Unlike them, we don't have a platform to show it. They offer 20 to 30% discount, which is usually followed by some delivery fee, platform fee and other fee.
नीचे ऑर्डर रहेगा तो डिलीवरी चार्जेस और एक्स्ट्रा हो सकता है.
Our gig economy startups, especially the quick commerce, for instance, are truly one of the kind of innovation that only India has. But that's not to say the brick and mortar retail is not doing fine. They are being challenged. I recognize that. They are being challenged by quick commerce, and we need to handhold and support our brick and mortar retail.
Grocery consumption has grown by 46 billion. In their own report, it's mathematically impossible that the Kirana store would be shrinking. It's not possible. Our estimate, this industry has created 450,000 jobs, and we can give the data and the back.
All said and done, and even with a big headroom for growth, the quick commerce industry faces a critical challenge: profitability. Critics question whether the model's high costs can sustain its rapid expansion. Blinkit leadership says that it's nearing break-even, helped by route optimization and subscription plans. Zepto says that 75% of dark stores are operationally profitable. Swiggy Instamart continues to invest heavily to reduce losses, but the leadership says its profitability timeline remains unclear. Meanwhile, sources suggest that Flipkart Minutes, a recent entrant, is at least a year and a half away from reaching profitability as it scales operations and optimizes costs.
While the novelty will definitely stay on, what needs to be noticed is that it has to go through a full cycle because novelty wears over time. So beyond that, the entire concept of quick commerce has to add substantial value more than what the regular commerce or whether the mom and pop stores have been delivering. And that has to be seen in a full cycle, good times, bad times.
All the players are working on 3 strategies to turn a profit. These include boosting order frequency and subscription, models like Zepto Gold and Swiggy One, with the aim of unlocking customers into frequent usage. The second strategy focuses on increasing the average order value by expanding product lines, adding high-margin items like pet care products, health supplements, and ready-to-eat meals. AI-driven suggestions and bundle offers also help to maximize cart sizes. And final weapon in the arsenal is the tried and tested cost optimization. Through efficient micro-warehousing, predictive analytics for demand forecasting, and better vehicle and manpower utilization. But with new players like Amazon, JioMart, Ola, and Nykaa planning to enter the quick commerce and existing companies ramping up investments, the pressure to stay ahead of competitors is immense. Analysts are not fortune tellers, and the future is difficult to predict. But for now, the millions of Indians are happily tapping on their smartphones for instant gratification, and the race to your doorstep is being fought on zippy two-wheelers.
Time is money, and quick commerce firms know this all too well. At the same time, customers must also bear in mind that convenience comes with a hefty price tag. This is a crucial time of expansion and customer acquisition for these firms. Delivery time should ideally come down as latest technology is incorporated across the supply chains. But there will be pressure on these firms to maximize deliveries per kilometer. And that's when the relationship between time, money, convenience, and loyalty will face its ultimate test.
If you like this video, then like, share and subscribe to ET Now.